Oh, thank you for having me. Thank you for having me. And very good evening, everybody watching.
Thank you. Okay, so David, here's what we're going to do. We're going to assume nothing. We want to learn from you because I still believe that the fine wine investment concept and idea is still at a very nascent stage in India. And we have a lot of people watching us right now, which is a mix of all genres of people, from the very, people who love their wines to hospitality, professionals, all kinds of people from the trade. So we're going to start from the absolute basic question, which is, what is the concept of fine wine investment?
It's a good question, the right question to start with. Okay, so to understand what we're talking about, we should probably qualify what wines we're talking about here, because when one's investing in the wonderful world of wine, specifically you'll be investing in fine wines. And this is quite important actually for a number of reasons, because fine wine has a number of uniquenesses actually compared to pretty much any other luxury asset. So we need to sort of define what we're talking about with fine wine. And of course, I think for people who are novices to wine, it might be a bit of a sort of scary phrase almost, but I promise you there's nothing to be afraid of with fine wine. It's very, very simple. Fine wine is wine that will mature with time in the bottle. It will improve with age in the bottle. Now, most of the wine that you buy these days, the stuff that you buy from the supermarkets, it won't do that. It's at prime, optimal drinking conditions when it goes into the bottle and you want to drink it within a year or two. But as you go up the scale of fine wine into the more glamorous and the more expensive wines, you'll find that they have a longer and longer and longer lifespan. And when you get to the very top of the pile, in the sort of wines that we trade in at Amphora and that you might want to invest in, you've got an incredibly long lifespan of certainly sort of 30 years and stored well. You might go up to even 100 years. It's possible. I've drunk 100-year-old wines in actual fact. Now, why is this important? I'll tell you why it's important. The fundamentals of investing in wine are actually pretty straightforward and pretty easy to grasp. If you think about the way that wine is produced, you've got all these vineyards all around the world, and they are, of course, they're a parcel of land. Now, what that means is that the wine producers are limited to the amount of grapes that they can grow by the geography of that land, and indeed in some places by the laws. In places like Bordeaux and Burgundy, there are laws which will restrict the way that wines are made. But anyway, regardless of that, you can't make more grapes than you can produce on your land. So if you've got a very fancy winery making very expensive wines, there's only so much you can ever produce in any given year. Really unusual, if you think about that in the luxury good world, that's incredibly unusual, because if you make fancy watches or fancy handbags, you can increase or decrease production depending on demand. But with wine, you can't. You make 15,000 cases this year, you're going to make 15,000 cases next year, you're going to make 15,000 cases the year after that. Okay, so we've got this fine wine product and it's produced in finite quantities. There's only so much going to be produced each year. Now, this gives us the bedrock of the investment market, because what you have here is you've got instant scarcity. And you can couple that with the fact that over the course of time, that's going to reduce. That actual supply to market is going to reduce. Why? Well, it's pretty obvious why, isn't it? People are going to be putting the corks out of these bottles. So you start out with a very small amount of wine. You have immediate scarcity, great desirability because we're in the fine wine, we're in the luxury space. And then over time, we have diminishing supply to market. Now, where supply is static or diminishing and demand remains the same, you will have upward pressure on the prices. If demand increases at the same time, then you're going to have extreme upward pressure on the prices. And some of the stuff that we'll talk about later on in this session is why demand is increasing on a global basis. But there are the nuts and bolts of it, right? A really rare product that's under high demand and gets rarer and rarer over time, and therefore increases in value over time.
Amazing answer. And I'm so glad, because you touched upon so many. I was actually making notes and saying, I must ask about this, I must ask about this. Uh, no, brilliantly answered. Thank you for that, David. What I do want you to share a bit more about this with us is, and I get a lot of people asking me this, is it a new concept? Is it something that has just been discovered? I'd like you to tell us how this is something that has been happening in the developed markets and the matured markets like the US and across Europe for many, many, many years now. And people have perhaps draw some examples of how people have actually made money traditionally out of this as an alternative investment.
Yeah, well, it's a really interesting thought, actually, because the market has changed beyond recognition in just the last 2 decades. Now, the answer as to how long this has been going on for is pretty much as long as wine has been, not as wine has been made, but pretty much as far back as wine has been commercially traded. And the history of it is really, it was sort of once upon a time, it was just really the English and the French that were drinking these fine wines, and the landed gentry who could afford this stuff would buy more than they needed and wait for it all to double in value, drink their bit for free, and sell the rest to the poor people further down the line who had to pay top dollar for it. So there has been a sort of very primitive wine investment market taking place for quite literally hundreds of years. I'm not exaggerating when I say that.
Yeah.
Now, that's not really to say that there's been a mature investment marketplace with any sort of structure for that amount of time. And even my sort of relatively short tenure in wine compared to those several hundred years, there have been some remarkable changes. I mean, my sort of the reason I came into this marketplace is that, and this is the same for the colleagues in my business, is that I was really an accidental wine investor. I was buying all of this stuff when I was a stockbroker and buying, more stuff than I was ever likely to drink and more expensive than I should have been buying, but I loved it. It was my joy and it was my passion. And then over time, what I found was that these wines were going up in value, and the merchants that I bought it from were buying the stuff back from me, giving me a profit. And so I was thinking, hang on, what's going on here? I'm curious. This has got my attention because, I love wine. It's my thing. I understand the investment process, and I really want to understand what's going on here. I was so curious. And so I spent the longest time trying to understand the marketplace and trying to answer the question that you've asked me, which is whether there is a structured and developed marketplace. And the conclusion I came to was there was not. And my observation was that the wine investment market was managed by good old-fashioned wine merchants who are all lovely men and women who know everything you could ever want to know about wine and a little bit more, but they don't know anything about investments. And they were trying to give people advice to the best of their, in good faith and to the best of their knowledge. But my observation was that this was a little bit poor on the going inside and hopeless on the coming outside. What I mean by that is when people wanted to sell their wine and reap a profit, it was a sort of one-person relationship. And this is what tempted me really to launch Amphora, because I thought, hang on, my network, myself and the guys that I know, we must be able to apply our knowledge and help people make better decisions and get a bit of a better result out of their wine investing. So we came together with a view to doing just that, and we found some really sort of unique things that I think we still do that I don't think anyone else in the marketplace does. But throughout that time, there have been some real innovations. There's probably the most groundbreaking or market changing is a business called LiveX, which is an online trading platform. It's a little bit like a stock market for wine. It's not a true stock market because you don't. But
I find the fact that there is a LiveX and that there, I find the fact that it's slightly more regulated than so many other alternative investments, like art, for example. We pay top dollars for our art sometimes, and it's not regulated. It's like the seller's price. The seller says, "This is how much I'm selling it for. Take it or leave it." So do you find wine in that sense different? And we do have one question from, we have many questions, but we're trying to pick a couple of questions which we think might be relevant to answer. Someone asks, do any of the Indian reserve wines qualify as fine wine and which can be stored for years? The answer, of course, is no. But do in fact throw light on which precisely are the wines that are the kinds that are really investment worthy, specifically which countries or regions we might be talking about.
Okay, so the answer as to whether India is producing fine wines is producing some fantastic wines, and I spend a lot of time in India and I love trying them. Is it producing any investment wines? The answer is no, and that is nothing to do with quality. And in actual fact, there's an important point to make here, that there's a funny thing that quality is not the most important factor with regard to an investment wine. There are other things that come into play, and probably the most important is the pedigree, the history of the vineyard. And it takes quite a long time for young upstarts, vineyards that have only been around for 100 years or so, to actually break into the investment scene. This is the key to this question. When you're buying wine as an investment, you want to be able to sell it, right? If you can't sell something, you shouldn't invest in it in the first place. And there are precious few wines that enjoy a ready liquid secondary marketplace. And it's very important that one is investing into those. So that's why there are no Indian wines on the investment scene. It's why the old world does dominate, but new world wines are coming onto the scene in spades. In actual fact, if you look at the last 12 months in the market, some of the North American wines, the Napa wines, have been killing it. They've been making mincemeat of Bordeaux over the last 12 months. So there's quite a lot of diversity in there. I love that there's that diversity there, because you mentioned before some other asset classes. With wine, there are so many different opportunities.
Yes.
There are perhaps, at any given moment in time, there are perhaps 3,000 or so opportunities that the sensible investor might want to consider. And of course, they all move at different rates and at different times. And so, you can diversify not just into wine, but within wine. And I think that's again, with my stockbroker's hat on, that's one of the things that makes my heart sing, because we've got a proper marketplace on our hands rather than just a boring old, homogenous graph like oil or gold or whatever else.
No, I love how you answered that question, David, because what we're essentially saying is over and above quality, which is a given, right? When you're talking about fine wines, the quality is almost sort of a given. But what we're looking for as three other parameters, which are equally important or even more so, is one, they're made in finite quantities. Because if an Indian wine, for example, were to make it in this, then obviously the producer was in a position to ramp up the production at any point in time. So we want them to be made in finite quantities, so there is a feeling of scarcity. And so more people want it, which leads me to the second point, which is there's a global demand. And global demand is important also from a reselling point of view. Like at any point in time, you should be able to make your liquid, shouldn't be illiquid, right? Your liquid shouldn't be illiquid, and you should be able
to pun intended, right?
As quickly as possible. And the third is the legacy, the history, and the pedigree of the producer, the estate, just having a long history of being in the business of good wine making. Where can a person learn about fine wine investments? That's another question. Well, you're learning some of it now, even as you hear David Jackson of Amphora Portfolio Management speaking with you. But also, David, guide some of our listeners to where else they can go and read up a bit more. Are there,
Yeah, sure. I think there are more and more resources out there. We put a lot of information onto our website, actually. And a member of our team actually is a guy called Phil Staveley, who wore very big pants in the City of London and elsewhere on the investment markets. He was head of global emerging markets for Deutsche Bank and Merrill's and that sort of thing. And he is the head of our analysis department, and he writes regular missives that we put up onto our website, and they're actually a really good resource. He also writes a column for the drinks business. Through lockdown, it's been slightly more sporadic than it used to be, but they are all still there, actually. So if you go onto our website, which is apmwineinvestment.co.uk, you can find a back catalogue of all of these research reports. And they're written in a very informal, friendly style. I think they're one of the best resources actually to learn about wine investment. We go back to LiveX. We mentioned them just now. They run a wonderful blog. I think their information is priceless because they're one of the well, I suppose where they're important is that they have really great data because so many people are trading through them, that they've created a certain amount of transparency with regard to pricing and that sort of thing. I'd like to come back actually in a moment to your question, Sonal, about pricing, because there's quite an important point to make there. But they also run a blog. But I think the relative infancy of the modern marketplace means that most of the stuff you're going to get online rather than, to the best of my knowledge, there aren't any sort of, wine investment courses. If you do the WSET, it doesn't sort of touch on wine investment. Perhaps it should, perhaps it's
But I would also like to say, obviously, not your website, but in general, for somebody who's trying to just navigate this world on his own, and he goes online and tries to read up, I often believe that, if you're just looking for academic purpose, then there's a lot of knowledge you can take in and learn about it. But if somebody were to jump into this, to do this or sort of as an investment or put their money down, there can be some risks and volatility involved. And so it's always worth working with somebody you can trust, or a partner like Amphora, or, someone like that. So can you make us aware of what might go wrong or could go wrong if one were to try this on his own, or even with a company for that matter?
Absolutely. So I think like any investment market, there are threats and there are dangers, and most of these you can mitigate against with a few common sense decisions over time. I mean, you do of course have normal market risk. Prices don't always go up. It's like any marketplace. Prices will go up and they will go down. You can, to some degree, protect yourself from those fluctuations in the marketplace by having a diversified wine portfolio. I always try I think people often think, I quite like the idea of investing in wine. I'll buy one case of wine and see how I get on. And of course, it's just not the right way to approach it, because all you've done really is you've had a bit of a punt. If that case of wine goes up, you're having a party, and if it goes down, you think, that was a load of rubbish.
You're not really doing it.
So it's important to have a bit of diversification. Have a bit of Bordeaux, have a bit of Burgundy, have a bit of Italian, maybe have some North American stuff. So that's a very important rule, which will help protect you from your normal market risk, which is just fluctuations in prices. Now, outside of that, where I see people making mistakes, there are some classic mistakes that are far too easy to make. We've already touched on the wines with no secondary market. I think that the market is not yet in a place where one should be seeking out the next big thing. My team a couple of years ago spent a whole summer trying to resell piles of really fabulous Australian wines that a company had set up to advise people to invest in. The company promptly went bust. All of these investors came to us and said, help, we've got this wine. And it was wonderful stuff, and we just couldn't sell it for them. And the poor investors end up getting, sort of 30 pence in the pound back for these investments that they made. And that's because what this business purported to do was punt on the next big thing. I think at the moment you need to follow. You can be clever, you don't need to make obvious choices, but you need to follow a relatively well-trodden path and look for those wines that have a secondary market. So
what I'm hearing you say is only blue chip, no going mid. What's the word, Andrew?
Well, I did say there were 3,000 opportunities, so it's not, they can't all be blue chip, but they are all wines that have got a ready secondary market. And the reason that I say that there are 3,000 opportunities is not there are 3,000 different winemakers. There are probably only about 100 to 150 winemakers that you might be interested in investing in. But some of those produce more than one wine. But of course, the key is that every year, every vintage simply being the year of production, they produce a product which is absolutely unique from an investment perspective. The minute you take your wine home, you make it almost unsellable, because of course, nobody knows whether you stored it in the airing cupboard on top of a radiator, drank it, refilled it with Ribena. There's no history. So a golden rule when investing in wine is keep your wine in a bonded warehouse. That's a tax-free warehouse. An even better rule is actually to leave it in London. That's not me being London-centric. It's just me being matter of fact, because London is the sort of trading hub for wine internationally. And what's happened over the years is that London has become sort of accepted as the benchmark in bonded warehousing. And so if your wine is in a bonded warehouse in London, it's kind of the guarantee to your next buyer that the wine is what it's supposed to be, that it's got good provenance, that it's been well stored, and it makes it just so much easier to sell. So that again, that's a trap that people can fall into. And a third trap is that you don't want to buy anything that's too old, right? If you get to be a real expert, you can buy the old stuff. But it's like the antique market. You know, if you're trading in wines that are 50, 60, 70 years old, they're unique. They're like works of art. Each one is very different to the other. And it does require a level of expertise that's way above what one would normally need. The person in the street can really safely and really happily invest in wine if they're investing in young wine. Because young wine in a bonded warehouse, it's fungible. Me as a trader, if I go to the marketplace and I want to buy myself a case of whatever, 2015 Chateau Lafite Rothschild, if there are 20 cases for sale and they're all in bond, I'm buying the cheapest one. I don't care which one it is, because they're all the same thing to me. So again, that's another rule for novices coming to the marketplace. So follow a relatively well-trodden path. Make sure that those wines trade. The way you can do that is probably by asking a few people in the trade, a few wine experts, whether they think it's got a secondary market. Don't buy anything too old and stick to wine in bond. That's a golden rule.
So stick to wine and bond, guys. That's an important point, because one of you is asking, how do you think the high import tax rate in India, is it profitable to invest in wine? When you're investing in wine, you're not, like David explained, you're not actually bringing the wine into India, so you're not having to pay any import tax on it. You are keeping these wines overseas, stored professionally under professional storage conditions. So where does Amphora Portfolio Management keep its wines? And is it all on paper, the investment, or do people actually get not actual custody, but they actually own physical bottles that are stored on behalf of them?
Yeah, that's correct. They do. Yeah. So the practicalities of investing in wine, or certainly the practicalities of investing in wine through Amphora, are that each of our clients has their own portfolio of wine to which they have legal title. It's their asset. Now we babysit that wine for them in our warehouse, and our warehouse is just outside London, actually, in a place called Tilbury Docks, in a sort of very secure bonded warehouse. It's like a sweet shop for me when I go there. There's all these beautiful old wooden cases, and every dream wine you could ever imagine is down there. So all of our clients have their wine in that bonded warehouse. Now, of course, the fact is it's their wine. If they want to drink it, if they want to take it home, then they're very welcome to do so, because they do own it. But we will actually go as far as breaking the contract if somebody takes their wine out of bond, because we can't help them from that point onwards. So it does mean that for an Indian investor, it's incredibly straightforward, actually, subject to the the allowances of moving money out of India and all that sort of stuff that has to be taken care of at a local level. From a UK perspective, it's very easy, and in fact, that's why India has become such an important marketplace for us. I think perhaps what we haven't mentioned yet is why I'm here from London as opposed to any of the other investment advisors, and that's because we have a flourishing business in India. We have a business operating now. We have a managing director in the region called Cecilia Oldner, who was a friend of yours, Sonal, and her history is that she was one of the bigwigs, one of the driving forces behind a little tiny vineyard that some of you might have heard of called Sula Wines. You might spot it now and again throughout India, and she runs the operation there. And I was coming to India before lockdown. I was coming to India 6 times a year, in actual fact, and man, do I miss it from lockdown. But so I have a lot of experience of helping Indian investors, specifically Indian investors, some domiciled in India, some international, investing into fine wine, and we have a lot of clients there. I actually thought in 2019, I thought that India was going to overtake the rest of the world, apart from the UK as our bigger marketplace. And of course, that was completely torpedoed by this bug that everyone started catching. But nonetheless, India remains very important. And I think that India is, for the wine, well, that's what the summit is about, right? For the wine world in general, India is the beating pulse now. It's part of the future, and it's so important.
Well, that's encouraging to hear. That's amazing, and it's great to see that your business in India is flourishing, because I increasingly get a lot of people asking me, how do we go about it? And, so on. So it's great to see. We should say hello to Cecilia, because I know she's live and she's listening in to us.
We should also say happy birthday. It was her birthday just last week. So happy birthday
last
to Cecilia.
Yes, of course. Well, I was wondering what you were saying, because I do know when her birthday is. She and I share our birthdays, actually.
Well, happy birthday to you as well, in that case, for last week.
Thank you. Okay. Well, I'm getting excited now about everything that you've been telling us. So I'm going to dive into more sales-related questions. Tell us who's best suited to do this. Who's a good profile of person who can do this, and how much money do I need to deep dive?
Okay. Okay, fine. So I learned a sort of hard lesson a long time ago about trying to work out exactly who a wine investor is, because I think that it's so broad and long that it's very difficult to define. So what we've done over the course of time is we've developed a number of different propositions that will cater to different needs. Because the wine investor wears many hats, right? And so on the one hand, you might have someone who is an absolute enthusiast, loves fine wine. They're in the game because of their joy of fine wine, and their investment is probably to help them drink fine wine more cheaply or free, even if they can engineer sufficient returns and rewards out of their portfolio. And then at the other end, you've got the very pragmatic wine investor who looks at it and says, well, this looks great. I can see that there are certain ways in which it's non-correlated to the other marketplaces. It's a physical asset. I like the fact that I have the security and the tangibility, non-denominated in rupees, internationally traded. So they're taking a very pragmatic approach, and they might not care less about what wines they're investing in because they don't have an emotional attachment to it. Now, we will, of course, cater for both sides of the equation and anywhere in between. The decisions as to what populates their portfolios will, of course, be slightly different, because one's motivated by emotion and the other one's motivated purely by maximizing the profit out of it. So I suppose it doesn't really matter.
This combination, by the way, sorry to cut you short, but this combination sounds exactly like me and Andrew, by the way. I'm the person who gets all emotional about everything I buy, and Andrew's the one like, okay, how much money is it making? Let's sell it without thinking, So
but there we go. You see, I'm almost like your love child, sort of half wine and half finance. You see,
that's our combination.
Yeah, exactly. If you do. Yeah, exactly. If you have little ones, they're going to end up like me, I warn you. So within that, I think the second part of the question is how much one needs to commit to the marketplace. Now, regrettably, this isn't a super cheap investment to get involved with. No. And the reason it isn't super cheap is that all of these fancy wines cost an arm and a leg. The matter of fact is that one of the great desires of wine is that it is so expensive. To some extent, it's almost, well, I would no, not even almost. Actually, it is a Veblen good, in so much as in the marketplace right at the top with the Screaming Eagles and the Romany Contis, tens of thousands of pounds a bottle sometimes. The more expensive it gets, the more desirable it gets. And I'll tell you something else.
Yeah.
This is a really sobering thought about wine. We talked about the uniqueness of wine compared to other luxury assets at the start of this. There is one facet of wine which is absolutely unique, and that's that you get to use it once. And I would question how many people would be buying Louis Vuitton handbags and Rolex watches if they got to use them once and then they had to chuck them in the furnace. And when you think of it in those terms, it kind of makes wine the ultimate luxury good.
You're paying all that money for a one-time experience. I never thought of it like that.
It's the only luxury good that's made to be destroyed.
It's like you're drinking all of that, 1,000 pounds in one go.
Yeah, yeah, that's right. Yeah. And you have it in the glass and you think, well, that's £100 there.
It's the highest level of it's almost like food, right? But of course, we don't eat such expensive food, but it's almost like when you pay a lot of money for really great food, It's like you're consuming it instantly and it's gone. It's done and done.
Yeah, I often when I do sort of wine tastings and things like that, I often pose the question to people. I say, can anybody else think of a luxury item that has these same characteristics? It can only produce in finite quantities. It gets rarer over the time, and it can only be used once. And people really do struggle to come up with it. But food comparisons are really the only thing that comes close. I mean, people sometimes cite things like caviar and. That brings me to the point. I have a lot of questions to ask you, David. But what that leaves me with is the point that if you get to consume it only once, then all you're left with is the brag value beyond that, right? Because all you have is pictures to show for it. Hopefully social media helps because you managed to post a couple of those pictures and let the whole world know you drank this. So Instagrammable.
But it's so Instagrammable. But really the brag value is what you're left. There's so much brag value to the fine wine investment scene, even while you're an investor or well after you consume something really that expensive, isn't it?
Yeah, I agree. And I think that brag factor transposes into wine investment as well, because there's something rather lovely about being the owner of a few cases of Chateau Lafite Rothschild and Chateau Latour. And it becomes, I think that a lot of our investors, even those, when I mentioned before that a lot of our clients start out very pragmatic. But I think even those people can't help but fall a little bit in love with it. Yes. And it's a sort of dinner party topic to talk about. And I think on that basis, it makes it a lovely thing to invest in. It's one of the things actually that we've had to get a really fine balance over the 12 years we've been in operation, which is being thoroughly professional because we're taking responsibility for other people's money, and we take that responsibility as seriously as any financial advisor does or should. But equally, we're wine people. We're all wine people, and we love the stuff. And I would hate to think that our messages in any way sort of dragged the joy and the romance out of wine. So we do an awful lot of stuff where we immerse the clients into fine wine, and we do sort of blind tastings where they get to try the really fancy stuff compared to supermarket stuff to see if they can tell the difference, and all these sort of things that will educate people and get them really engaged with fine wine, so that our hope is that they don't end up as just the wine investor, but perhaps. So
I attended one such blind tasting that you had hosted in Mumbai a few years ago. Remember? That's where we met, actually, David.
Yeah. That's right. Yeah. It's scary having a master of wine in the audience. I have to be on my toes, you see.
It was an obvious guess, though, the supermarket wine versus the wine. I can't remember which one you served, but it was an obvious one. But I did shut up. I didn't say anything. I let the others at the table guess.
You're being very kind and sparing my blushes, I think.
We have a few direct questions now. We're getting down to the brass tacks. What is the potential rate of return vis-a-vis any other alternative investment that we can expect? Or what is the ideal commitment time frame of wine investment that one can expect to hold a wine portfolio for?
So in index terms, if you go back, so the benchmark index is, again, we could refer to our friends at LiveX. They produce the most reliable indices in the marketplace. The LiveX 100, which, as you might imagine, tracks a bundle of the 100 most frequently traded wines in the wine investment space, is the benchmark. Now, Thomson Reuters. And if you track that back in time, you've got a long-term performance of just over 10%. Now, that performance was wildly higher than that until 2012, but there was enormous correction in the wine market in 2012. I think you felt the pain of that actually in your own portfolio, and that was a consequence of China clamping down on corruption, but I can tell you more about that if that's of interest to anybody. But that's brought that long-term performance down to about that level. Now, my view is that one can do considerably better than that, but one has to be making, there are two ways to do it. The first one is that you make better choices. So you don't just want to buy all the 100 wines that are in the index. You want to find a way to isolate those wines that you believe are the best ones from the 100 wines in the index. You want to have those in your portfolio. And the second way that you increase those returns is that you trade the wines on a reasonably regular basis. Don't just sit there waiting and waiting and waiting and waiting. So my belief is that a traded portfolio will perform far better than a static portfolio. We aim we will tell clients at the time that they're investing that what we would like to do is double their invested funds over a period of 5 years. And to achieve that, we've got to get 12 and a bit % per year. And if we're not outperforming the market, doing its 10.3% by that amount, what are we in business for? So that's the sort of returns that we're looking at. Now, within that, really exciting things sometimes happen. In fact, a lot of my clients in India actually benefited from Margot 2015 was an investment that we put into people's portfolios a few years ago. And for all sorts of weird and wonderful reasons, it trebled in value in an 18-month period. So you sometimes get these pockets, bursts of activity, which can really boost your returns into these portfolios. So I think that's the trick to maximizing it. You've got to have someone keeping their eye on it for you, or keep if you can keep an eye on it yourself, then that's fine. You can also do that, but you want to find a way to select the right wines, and I can talk to you about how to do that if we're interested in a minute. We can come back to that topic, and keep trading them. As a timeline horizon, I think that sensibly speaking, 3 years should be a commitment. And at Amphora, we're much happier if someone gives us a 5-year timeline. That's a period that we're very comfortable with. I think for those investors who like in and out markets and prefer doing things that can take place within 12 months, it's the wrong marketplace. You should probably look elsewhere.
But I'm glad this question was asked and that you're able to answer that it's a 3 to 5 year, because also what a lot of people tend to do is feel very impatient, right? Someone puts in the money and says, okay, what am I going to get next year for it? And wine prices don't really fluctuate that much year on year, I'm assuming. But, Yeah. So again, it comes the fluctuation of wine prices is quite an interesting question, because what we were talking about then was the market in index terms. Now, of course, an index never shows the full picture, because when you've got something like wine, which is in so many sectors, I mean, when we analyze the market looking for opportunities, we break the marketplace down into geographical sectors, and Bordeaux's got 5 sectors alone, and then you move into the other bits of France and all around the world, and we end up with something like 19 different sectors that people can invest into, and they all move at different rates and at different times. And so, over the last 12 months, had your portfolio been exclusively Bordeaux, it'd have been a bit of a boring experience, if I'm honest. Not much was happening. But if your portfolio had been made of Super Tuscans from North Italy and Napa Valley wines, you'd have been having a blast. Now, that might not be the case for the next 12 months. In fact, it's unlikely to be the case for the next 12 months, because one of the reasons that Bordeaux was stagnating a little bit, just plodding along and being a bit boring, was that our good old mate, Mr. Trump, remember him? Yeah.
How
can we forget?
He got crossed with the European Union. He thought that they were playing silly whatsits with Airbus and giving them a competitive advantage over Boeing. So he slapped a 25% tax on some luxury items from Europe, and one of those was French wine. And it killed the North American market, because that's a hell of a tax, in addition to their normal import duties and the other stuff that went on top of it. Now, losing the American marketplace has been one of the hindrances for Bordeaux. But of course, we have a new administration and we have a new trade representative, Catherine Tay, and she has already suspended that tariff. And it looks now almost certain that she'll abolish that tariff.
That's amazing. That's incredible.
As soon as she can get it passed through the Senate. And so it's going to be Bordeaux's time in the sun again, right? So this is how you maximize your profits. So if you were an investor in fine wine and you've done very well last year with your Sassicaia and your Opus One and whatever else, now it's time to sell a bit of that, take a bit of profit and stick it into a bit of Chateau Lafite and a bit of Pontet Canet and whatever else.
Thank you. I was going to ask you, give us some tips, and you are already giving us some. So I have one final question for you, David, and that is Bordeaux, since you mentioned Bordeaux, has seen embarrassingly great vintages in the recent past, isn't it? It's almost now become impossible to have a bad vintage in Bordeaux.
Vintage fatigue, I think.
It's like good vintage fatigue. It's like one great vintage after another. Is that good for your business or bad for your business? What I mean is, does that create oversupply and maybe then rationalize price or whatever, or is it great, because that means there's more wine and more people can jump into it. More people can have access to the kind of wines that they want to have in their portfolio. How do you see this?
We don't care less, actually, about the quality of a vintage. Now, just because a vintage is poor quality doesn't mean that it's going to be a bad investment. And in actual fact, it could be the total opposite of that. A really great example of this is that when China piled into the marketplace from about 2005, the market went absolutely loopy because, of course, it's a tiny marketplace. We estimate the international marketplace is probably about $6.5 to $7 billion US annually. That's traded in London in gold on a weekly basis. It's a really small marketplace. And so when you had the mobilization of a country the size of China into the marketplace, it went crazy and prices launched at a rate of knots. Now, what happened was that the people were learning about wine in China. This isn't to be disparaging to the Chinese wine drinker. They now know more than I do, and they keep me on my toes when I go to China, which is rare these days. But in those days, they were just learning, right? And so what they wanted was the experience. They wanted to experience Chateau Lafite. They wanted to experience Chateau Haut-Brion. So what they were doing is they were buying the cheapest ones that they could do to get the drinking experience. And where did the cheapest ones come from? They came from the poor vintages. So what happened from about 2005 is that the weaker vintages, the less desirable vintages in the traditional European and North American markets, went crazy. They were the right ones to invest in. And that effect is still seen to this day, that what we tend to see in the marketplace is a sort of push me, pull you effect, that there'll be a differential between strong vintages and weak vintages, a price differential. If that differential is great, then the poor vintages will start to look cheap and people will buy them and push the price up. If the differential contracts, it starts to make the good vintages look cheap. The logic being, well, hang on a second, if I'm buying the stuff, I might as well just pay a little bit more and get the really good stuff. And so the good stuff takes off. So we find now, from a Bordeaux perspective specifically, that it's cyclical as to whether we want people investing in the very best vintages or the poorer vintages. So we don't care about the quality of the vintage. I think that a slightly different effect of having all these great vintages is that one of the effects of the modern market is that the chateau went crazy and they started putting the release prices up to levels that made no sense. And so the new primary market, this is where you buy the wines before they're bottled. You buy it when it's still sloshing around in the barrel. It's called en primeur. That marketplace really died for us. 10 years ago, that was probably 30 to 40% of the trading we did. It's now probably no more than 2 or 3%. Because of these silly prices, because it makes no sense, right? Why would you buy the new vintage more expensively than you can buy a back bottled vintage where you already know the quality, it's guaranteed, and it's got some bottle age and it's further along its improvement curve to the point that it starts to get consumed. So that's the main effect that we've noticed by all these super duper vintages coming out one after.
That is amazing, David. You really fired up our passion for, investment with passion, right? So that's what it's called. This has been such an enriching session. You've shared with us so much. There's been so much to take in, and I just love the way you've gone into all this detail, and we've sort of broken it down into, a complete detail for everybody to understand. There's been a lot of questions, lots of people throwing in comments saying this was great, this was a good eye-opener, this was a good learning experience. So I can't thank you enough, David.
Absolutely, my pleasure. Thank you for having me.
Thank you. And guys, David Jackson from Amphora Portfolio Management. Tell us your website again, David.
It's APM, Alpha Papa Mike, wineinvestment.co.uk. And thank you for listening, everybody. My only regret is I'm having to do it from London and not from Mumbai. But there we go. Soon.
You will be here very soon, just as the doors open for international trains.
That's as soon as they let me.
And we'll have a glass of wine. Not Screaming Eagle, but something nice, something wonderful, nonetheless.
So look forward to that.
Brilliant.
Lovely.
Thanks so much.
Okay.
Good
Cheers.
day.